Michael Saylor's preferred stock Stretch is breaking down, and people are saying the Ponzi is finally collapsing. It's Terra Luna all over again, they say. Sell 5 to 10 billion of Bitcoin right now, or the whole thing dies. And the fear is simple. If the price keeps bleeding, the math starts forcing Saylor's hand. Sell billions in Bitcoin to feed a rising dividend into a market already hanging on by a thread. The biggest Bitcoin buyer in the world turned forced seller at the worst possible moment. So is this the beginning of the end of the Saylor trade, or the bottom of the whole bear market? This is Truth Block. I'm Hurley. Let's mine truth. Real quick before we dig in, many of you who watch this show are not subscribed. So if you want the signal pulled out of all this noise every single day, subscribe to Simply Bitcoin and hit the notification bell. Okay, let's get into it. If you watch this channel, you already know what Stretch is. STRC is the bread and butter of Saylor's digital credit empire. A preferred stock built to sit right at $100 and pay you a fat yield twice a month. This is the piece that was never supposed to move. Well, this week it's completely broken down. And now it's at a record low in the mid-80s. And the timing is no accident. 2 days ago, Kevin Warsh ran his first Fed meeting, and the tone went hard towards hawkish. He signaled that no more cuts are on the table, with some officials calling for hikes right now. Inflation's back over 4%, the dollar ripped to a one-year high, and Bitcoin has been shoved down to its 200-week moving average. Things are definitely getting spicy. Oh, and Trump signed a ceasefire with Iran the same day. Hold on to that one, as we'll dive into the implications of that later in the show. So if you've been here a while, the fear should sound familiar. Months back, we did a whole episode on STRC, when CoffeeZilla called it a perpetual motion machine and the next Terra Luna. We walked through the bear case. STRC demand dries up. Strategy gets forced to sell Bitcoin to cover the dividend. That selling drives Bitcoin down and the leverage on top unwinds. Well, here we are. It's not really a hypothetical anymore. That's the test that's running live right now. When Stretch trades under $100 like it is now, Strategy can't issue any more of it. The cash spigot shuts off. To push the price back up, they have to raise the dividend, which only makes the cash they owe bigger. They've been filling the gap by selling MSTR stock, but that premium has collapsed towards 1-to-1. There's no room left, which leaves one door: sell Bitcoin to fund the dividend. And the loudest voices in the room say it won't be a small trim like the last one. Just picture it for a second. $5 to $10 billion in forced Bitcoin selling, dumped into a market already hanging off a cliff. Saylor himself dragging Bitcoin to the true bottom of this cycle. That's the nightmare scenario. And that's actually the perfect place to talk about Ledn, because if this whole mess teaches anything, it's what happens when leverage goes wrong. So if you're a Bitcoiner who needs cash but you don't want to sell your stack and become a forced seller yourself, that's what Ledn is for. Bitcoin-backed loans done right. Your coins stay yours, never lent out, and you can pay back anytime. Ledn has over $10 billion funded in 8 years. So to get liquidity without giving up your Bitcoin, visit learn.ledn.io/simply to learn more. Okay, so is the Ponzi actually collapsing? Let's look closer, because the loudest story is usually the wrong one. Two things are happening here, and neither one is the business is broken. First, this is clearly a leverage wipeout. People started treating Stretch like a risk-free place to park cash, so they levered it up. The second the price slipped, the margin calls hit, which forced more selling, which dropped it further. That's not Bitcoin failing, that's gamblers getting flushed. Second is linked to Warsh going hawkish. A preferred stock is the longest duration asset there is, a promise of payments forever. And when the Fed hikes, the outlook forever is what reprices the hardest. And it wasn't just Stretch that fell. Every preferred and Saylor stack dropped together across two different companies. One fund blowing up doesn't do that. A rate shock does. So yes, this is a real stress test, but it's also the market repricing duration and flushing leverage, not Saylor running Madoff. And the bear's entire case hangs on one word: forced, as in forced to sell, like it's a death sentence. Saylor says that's exactly backwards. Here he is at BTC Prague speaking with Natalie Brunell.
I respect the fundamentalist, but the capitalist, Bitcoin capitalist view is we need to attract capital into the network to grow the network. There's no way for the network to grow from $1 trillion to $10 trillion to $100 trillion unless we actually get new capital to flow. The reason Bitcoin went from 10,000 to 100,000 is because the ETFs invested $100 billion, because Strategy invested $64 billion. because we got 30 billion from other institutional sources. If that money didn't flow, Bitcoin would be trading 5,000 or 10,000 a coin right now. So the next level, to go from 100,000 or right now where we are to $1 million a coin, we need capital, and that means credit. And we either need digital credit that companies like Strategy and Strive create, or you need bank credit, which gets created by Morgan Stanley and Citigroup and JP Morgan. If they don't enter the market, then Bitcoin stagnates amongst the fundamentalists. And if it stagnates, at best it becomes 0.1% of the world's capital structure, and at worst it stagnates and crashes and fails. And so our view is, we're powering up the network, we're building a bridge between the credit markets, and you could close your eyes and wish they would go away, but they're not listening to you. I mean, every credit investor, a private credit, junk credit, mortgage-backed credit, municipal credit, sovereign credit, bank credit, money market credit, you name it, they're not going to Twitter reading the Bitcoin fundamentalists and saying, oh, I guess I should just get rid of it all and buy Bitcoin. They've had 17 years to do it. They're not doing it. They're not going to do it. So what we need to do if we want to change the world in a constructive way is we need to engage with them. We can probably persuade them to convert somewhere between 1 and 10% of their capital into digital credit, put it into Bitcoin, and make Bitcoin successful. We're doing that in the equity capital markets as well. We're doing it in the derivative markets as well. If we want Bitcoin to win, then we need to defend it politically, and then we need to power it economically. And there's no way that you can obtain the political influence without creating corporations that have economic strength and credibility. So I think that the Bitcoin capitalists are actually powering up the network, and they're empowering the Bitcoin fundamentalist. If you are a Bitcoin fundamentalist and Bitcoin goes to $1 million a coin, you're much more effective at pursuing and defending your values than if Bitcoin was $1,000 a coin. And so I think that even people that choose not to buy digital credit or digital equity or wrapped Bitcoin by an ETF, they're all the primary beneficiaries of the actions of the BlackRocks and the Strategies. BlackRock and Strategy collectively are trustees for about 7.5% of all the Bitcoin in the world. That means 92% of the Bitcoin in the world is worth 10 times as much. Not in those systems. So I think it's a very complementary relationship.
So Saylor says selling some Bitcoin to turn a gain into a dividend isn't the machine breaking. It's the machine running. And according to Saylor, that was always the design. He says the whole point of digital credit is to build a bridge, to pull $30 to $40 trillion of the world's credit markets into Bitcoin. Saylor says you don't get to $1 million per coin without that money moving, and it doesn't move on its own. So here's the honest frame. This is a stress test. The market is pricing a death spiral. But if Stretch holds and climbs back to par, Saylor doesn't just survive. He proves the entire thesis under live fire. And whether that peg holds, honestly, that's the smaller question. Forget the peg for a second. Look at who's panicking. It's not the no-coiners. It's not CNBC. It's Bitcoiners. The people who defended this man the longest are the ones now calling him a fraud. And if you've lived through enough of these cycles, you know what this is. A bottom never gets called by a price. It gets called by behavior. In the in-group turning on its own hero, that's what the floor feels like. This feels like capitulation to me. But I want to go further, because I think this is actually good for Bitcoin. For years, Saylor was the face, the leader, the guy. And right now, Bitcoiners are remembering something they forgot. Bitcoin doesn't have a leader, and it was designed to never need one. It has no CEO, no spokesman. It doesn't need Michael Saylor. It doesn't need me. It doesn't need anyone. Slay your heroes. The king can fall and the network doesn't even flinch, because there's no single point of failure. Not even a man holding $85 billion in Bitcoin. So that cult of personality cracking, that's not the system breaking. That's the system working exactly as designed. And it points to the simplest truth in all of this, the one buried under the entire war. You don't have to play. Here's Alex Lizette at BTC Prague saying it better than I can.
You cannot stop internet adoption.
No.
And you cannot stop Bitcoin adoption.
No, you can't.
So this institutional adoption is inevitable.
Mm-hmm.
And the way to do it at scale is actually to provide Bitcoin-backed credit instruments. And so you have Bitcoiners thinking that Bitcoin treasury companies are dead while they hold Bitcoin.
Yeah.
Any company that holds Bitcoin will win compared with companies that don't hold Bitcoin.
Yeah.
And Bitcoiners focusing on the Bitcoin treasury companies to criticize fiat should look at the fiat companies and criticize them for not having Bitcoin, not the other way around.
Yeah.
And so that's my view. The view is this is the most adopted credit instrument in history.
Yeah.
So at least you should get some curiosity.
Yeah.
And you don't have to buy it. That's the good news, you know. You can, if you don't trust anybody, you buy Bitcoin.
Yeah.
And guess what? The digital credit issuers, what they will do? They will buy Bitcoin.
Yeah.
So we are on the same team.
Yeah.
And I hope that the message can diffuse.
So if you don't trust Saylor, you don't trust the leverage, just buy Bitcoin. Hold your own keys and none of this can touch you. The treasury companies everyone's calling a Ponzi, they're buying the same Bitcoin you are. Whoever wins this fight, it ends with more Bitcoin bought and held. The infighting is a waste of energy, which is the perfect place to bring in the Bitcoin way. We just said self-custody is the perfect way out of this entire circus. The Bitcoin way helps you actually do it, the right way. No custodians, holding your own coins, no shortcuts, just real one-on-one guidance to take full control of your Bitcoin and safeguard it against your own mistakes so that you can pass it on to your loved ones. If this week finally convinced you to take self-custody seriously, book a free call at thebitcoinway.com/Hurley. Now let's zoom all the way out. Remember that Iran ceasefire I told you to hold on to? This is where it pays off, because the macro minds of Doomberg and James Lavish looked at how that war actually ended. And what they saw wasn't peace. It was a crack in something that's held for 50 years.
I think as time goes by and historians truly assess what happened here and the spin and politics are sort of put to the side, the U.S. achieved none of its objectives in this excursion against Iran. If you go back, and we have gone back and watched the video that the president released from Mar-a-Lago on the 1st of March, and you compare the stated objectives and justification for the war and where we are now, profoundly different outcome than the president had been led to believe or assumed or was otherwise convinced against his better judgment, however you want to frame it. This is a stunning result. And kudos to the president for taking the L, even though that's not how it's being shaped. But I do think if you start with that as a foundational input into your mental model, it's wildly bullish for gold and Bitcoin and all the US dollar alternatives, because it is a turning point in the history of the last 50 years of US dollar military-backed hegemony. A mid-tier power before the war absorbed everything that the US and Israel could throw at it, and it has emerged, arguably, as the stronger side in this war. It's just you can't deny that. And so why were Bitcoin and gold trading sort of negative correlation with peace? Because there were some very bad tail risk outcomes on the board that this ceasefire hopefully takes off the board. And you're seeing gold run today. You're seeing Bitcoin run today. You're seeing oil collapse today. We could talk about that. We have a piece coming out tomorrow, by the way, which we think is a profound outcome from this war, which I'm happy to get into, about how China has just proven to the world that it has harmonized hydrocarbon fungibility. And this is a really, really insightful thing that has happened. Our first foray into drawing some conclusions from it comes out tomorrow. So I know that I've covered a lot of ground, but I would say that if you pushed me, the bear market in Bitcoin is over. Absent a restart of the war, there's profound things happening, historic things happening decades-long trends reversing.
Now, Doomberg's call is geopolitical. It has nothing to do with Stretch or Saylor's dividend. He's watching the dollar, not the preferred stack. But here's what he's pointing at. It's never been more clear that the world is going multipolar. And underneath all of it, the debt math doesn't care who runs the Fed. $12 trillion is rolling over, and every road is bending back towards the printer. So ask the real question. In a world where no empire can be trusted to hold the money, what's the neutral asset nobody controls? It's not a flag, it's not a promise, it's Bitcoin. And it doesn't win because we want it to. It wins on pure game theory. For the saver, for the institution, for the nation state that can't trust its rival, it's simply the best option left standing. Bitcoin will become the next base layer of money. And that's why adoption can't be stopped. Just like the adoption of the internet couldn't be stopped. So back to where we started. Either Stretch holds the line, the leverage flushes out, and strategy comes through this stronger, the whole digital credit bet proven under fire, or Bitcoin loses that 200-week moving average, and we get one last ugly flush. And that's the capitulation that ends the bear market. That's two roads that lead to the same destination. This is the stress test that ends the bear market, either way, not the event that ends Bitcoin. So the fear is real, and the panic is loud. And the loudest panic almost always shows up right at the floor. Bitcoin is bigger than Saylor. It's bigger than the infighting. And you've always had the way out. Buy Bitcoin in self-custody, turn off the noise, and sleep well at night. Now I want to hear from you. Is this STRC crash a death spiral or a stress test that makes strategy stronger? And whose side are you on? The Bitcoiners crying Ponzi or the no-coiner calling the bottom? Drop your thoughts in the comments below. Hit the like button, share it with someone who's panicked this week, and subscribe to Simply Bitcoin so you don't miss what comes next. Enjoy your long weekend, everyone. Go touch grass and spend some time with other humans, and I'll see you on Monday.